Alright, what's up everyone? So, I am going to be doing this episode with regards to trading for travel. Now, I will be leaving Singapore for a very nice 3-week holiday in about 10 days or so. And I decided, why not challenge myself to trade for my holiday? Now, obviously, I have already purchased everything on hand. I mean, I've already purchased and paid for everything. But I told myself, I think it would be good to earn my daily spending. So for example, if I was intending to spend £100 per day, I would like to probably trade until I had that kind of money available for myself, so, and of course my family, so that we are able to kind of do what we want in terms of going for attractions and whatnot. Now the thing is, I think so far we've been trading as like we're just experiencing, just having fun with trading and whatnot, but we have not actually really had an objective. I think it's always good to have an objective with regards to when you go and I mean, like right now we want to have an objective, guys. So for me, I told myself, okay, so let me just give you a breakdown of the costs. It costs a total of, because I'm going with my wife, my 2 kids, and my mother-in-law, and of course my auntie. So that's a total of 11,000 Singapore dollars for the flight alone. Then you have the whole stretch of stays, either a hotel or Airbnb. That would set me back another 10 grand. So that's already 20,000 there. Then the day-to-day expenditure, whether is it just going around to have attractions and whatnot, maybe another $5,000 to $6,000 again. So all in all, I would safely say 30,000 Sing dollars would be kind of a good an estimate, not even including food, not even including maybe potentially buying some stuff. So let's assume that the whole trip will cost 30,000 Singapore dollars. So based on the fact that I have this kind of timeline, I'm looking to probably make at least, I'm not gonna be too ambitious. I would say maybe anywhere around 1,000 to maybe 2,000 Sing dollars a day while trading is kind of good enough for me. So if I kind of calculate based on that kind of requirement, okay, I would say that I would need to probably work around either doing $10,000 to $20,000 trades, just purely buying in and selling, and also looking at certain volatile cryptocurrencies. At the same time, I might have to also be using Bitmex. Now, as you all know, I'm not a fan of using Bitmex for purely trading. I always feel that it's always good to have an objective. So right now, I would say that I would not want to force a trade. I would still always be focused on trading with an objective. So right now, I feel that Bitcoin is kind of stable at the 7,200. So let's go to the charts at the moment. Hey there, Royal Pack. Nice to see you. Okay, so let's just say, let me go to the charts. Okay. So right now, if I feel that Bitcoin is kind of stabilized at the $7,200 range, theoretically, I should be probably opening up some longs. So at 7,200. So I have queued some longs at $7,200, and I'm looking at the resistance level of 7,400 to 7,435. Now, if we look at the current chart movement, I would say, I would say that the OBV, let me just click my OBV first, which is on balance volume. Okay, let me just change the color as well so that you guys can see. And we make the line a little bit thicker, and so OBV, I would say, is currently dipping a little bit, but all in all, it's still in an upward trend. And you notice that it does kind of follow the overall price movement or upward movement of BTC. Now, this chart is, of course, on Bitfinex, right? And Bitfinex just recently printed about $100 million. Another 100 million that is being transferred to Bitfinex. Who knows? May be a pump, may not be a pump. So OBV wise, looking kind of okay. I would say that at least it's moving upwards. Now let's check the RSI, which is the relative strength index, and the RSI. Okay, so same thing. I need to change the font. Sorry, the format. Thicken the line a bit, and maybe we put green. Okay, so for now we look at the RSI. I prefer to use 70-30. Still kind of far away from being overbought, so that's a good thing, right? Usually most cases, if you look at the 1 day, is not the usual time frame where traders are using. What's up, Sash? Okay, so let's maybe look at the 4 hours where most of the young'uns are looking at. Okay, so you see, as you can see, the OBV has dipped. Wow, what the hell? Okay, why did the OBV drop so much for the 4 hours? Is this correct? Okay, so anyway, looking at the RSI, however, the RSI, well, kind of almost touched the overbought, but then after that, there was this kind of so-so sell down, and it kind of reset itself. So the OBV is now down again, which is actually not very good for longing. And yeah, okay, let me see. Let me check other charts. Why is it so? Let's look at Bitstamp. What in the world? Okay. Okay, so on Bitstamp it's a little bit more like alright, you know. Okay, so there's a little bit of take profit happening at the $7,250 mark, as we all can see. So $50 seems to be like, you know, where people are moving in and out. So I'm assuming that people are using probably 25x and above, or maybe 50x or 100x leverage. So they're very happy with a $50 movement either direction. But I'm looking for a bigger direction. So I'm looking for, being that I have the objective of at least making a $300 per day, okay, I would really prefer to kind of, by the way, I'm not in a trade yet, okay, Vahid, it's more of going in at 7,200 and probably range trading it for the moment. Now, I know that you can look at the BTC long or BTC shorts on TradingView, and right now I think shorts are at the all-time high. Now, there's this sentiment that a lot of people may get liquidated, which they call the short squeeze. So if BTC price just bursts past 7,005, all these new all-time high shorts can potentially get liquidated. As you all know, I'm actually more on the bullish side. I prefer that BTC would be on the uptrend rather than on the downtrend. But yes, I also do protect my existing BTC positions by shorting occasionally. And so far, for the past 9 months, it has been more profitable to short rather than long. So, judging by the fact that this market movement, I would rather be more inclined to maybe short the alts rather than long the alts. But I noticed that the alts are starting to get a little bit frisky. So of late, if you notice, there has been some movement in the overall market caps. So we have Holocoin, which has been doing pretty well of late. I have no exact idea what Holocoin actually is, but I think I briefly kind of taken a look at it, and I think that they have 2 really decently prominent co-founders. So I will not, really comment too much about it, but I'm just saying that overall, if you look at the rest of the sentiment, it's actually quite bad. Okay, if you look at what's happening, there's Dropbill, there's Ethereum Classic. You have one fella that's doing 30%, but the rest of the others are not doing well. So right now, I would say that either the market manipulators or players are anticipating that Bitcoin is going to go either direction. So there's no activity in the altcoin market. This to me is also a sentiment, because if you were to kind of go into alts at the moment, if Bitcoin goes down drastically, you get smashed. If Bitcoin goes up drastically, you get smashed. So I would say that right now, the volume would be very, very much focused on the direction of BTC. So there is this divergence that's happening. I would say that it's anybody's guess, it's anybody's game. Okay, so right now, I kind of want to ask you guys, if you all are trading, I mean, would you all be long or would you all be short? So feel free to comment. And yeah, I mean, ultimately, it's just about consensus. Okay, so let's just say you are now looking at this market. You probably always want to have a financial objective. So I would like to kind of also, while waiting for you guys to comment, so far, apart from crypto, I mean, it has been almost a 9-month bear market, guys. We are still in a bear market, okay? So let's kind of have a discussion on whether or not you'd be inclined to security tokens, or you'd be inclined to purchasing shares. These are the things that we are eventually going to be exposed to anyway on this channel, because I personally feel that throughout this whole bear market, the good thing to do is to be diversified, because the risk to return reward ratio is pretty good in the crypto space. But however, that's not really a good way to create a portfolio. Why are we not perhaps investing in Blizzard? Why are we not perhaps investing in Alibaba, Tencent, leaders of industry? Even if you feel that the stock market is way overvalued, there's always opportunities, and at the same time, these leaders of industries only continue to grow and will continue to show growth. Recently, when Facebook took a hit, was it a time for us to consider? And if you feel that shares is expensive, it's $175. I'm sure that there are people purchasing Ethereum, which practically has no real world use case at the moment and no real revenue, but people are still willing to buy it at 285 to almost $300 per piece. So let's kind of not be too negative on the whole stock market being overvalued and all, and look at the fact that they do have a user base and they do have revenue. Okay, I think that is something that we have always been overlooking in the space overall in terms of crypto. Right now, crypto cannot safely say that it has revenue. Sure, it has transactions, and transactions generate fees. There are potentially certain countries that are more receptive to BTC adoption, but can we safely say that it's a mature industry? Definitely it's not, right? It's not as mature as the companies that I've just mentioned. For example, why I mentioned Blizzard. If they have certain successful launches for certain games, like for example, when Overwatch launched in 2016, it had a very nice pump. When World of Warcraft was launched back in, hey Mike, when did World of Warcraft launch again? 2004, is it? World of Warcraft. So when World of Warcraft launched in 2004, that was a success for the stock as well. $9 went up to $33. Sure, I understand it's a bit long term, it's a little bit grandpa, it's a little bit expensive. But hey, if you think about it, if it provides you a different level of risk in your portfolio, why is it so bad? Does everything have to go up and down 10 to 15 to even 20% in a day, for you to get your kicks? Come on, guys. So it's just really more of looking at things from a broad-based perspective. Yeah, I mean, look, I'm not asking you to do gold. I've kind of shut my mouth on gold. It's not for everybody. I mean, it is for me. I kind of like gold. So, I mean, I don't like it for the fact that it did dip $100 per ounce. But hey, I'm looking for the fact that there may be a potential financial crisis, and that kind of will help gold to be boosted up. But who knows? Maybe it might fall equally in tandem before recovering up pretty much strong. What about, for example, real estate investment trusts? I know that property is not a very big thing with the young because they are not able to even own their own property. Okay, most people are only looking at renting a property. But if, for example, right, you are able to put your money into a very simple dollar cost averaging strategy with a real estate investment trust fund that you are familiar with, and obviously you know that it's a credible developer that runs this fund, or at least it's run by a credible fund house, and if the fees are not too exorbitant, that could be a very nice dividend payout every quarter or every semi-annually. Yeah, look, the whole idea is that you don't have to put everything in crypto. That's what I'm just trying to say. I'm actually just trying to put some ideas, with you, and then eventually you can look at either ETFs, even you can look at mutual funds or unit trusts. And yes, I understand that the fees are not favorable. You may not break even in the very first year. You may be actually having to hodl or hold that particular, or stay invested or continue investing for the next 3 to 5 years, but it's something to get going. If our money, our cash, right, is not invested in crypto, we can always consider all this stuff, and as long as we kind of keep up with inflation, right, we are good. Okay, because money in the bank obviously is going to be earning nuts. Okay, so if it's going to be earning nuts, we have to consider other alternatives. And if you are not being exposed to this, or no one is talking about it with you because all your friends are not touching stocks, today I was having this I take a Grab to work all the time. So today I had the opportunity of speaking to this driver of mine, and when I mentioned stocks, he says, when I invest, I don't invest in stocks because I don't gamble. It's very interesting why he feels that way. I mean, this fella is a businessman, right? He used to be a businessman in the shipping industry, where he helped to repair ships. So back in the heyday, when the whole shipping, oil and gas was doing very, very well, his business was booming. He was a pioneer in Singapore, right? At the time, Singapore had no shipyard, so he was one of the early guys. This guy is already 65 years old, right? Owns a landed property. It's very comfortable. His kids are already grown up. He's already a grandfather. Okay, so he just shares that at the time, he made a lot of money, because he was one of the pioneers in the industry. Right now, of course, we can safely say that crypto is definitely a new potentially booming industry, but however, it does have a lot of potential pitfalls that we might fail to see, because we're always very focused on the near-term gains or the short-term gains. Right now, a lot of people are not able to see far enough because there's so much uncertainty. Where's the potential regulations? What is the framework? Are we having the right people educating or teaching us? At the moment, none of that is available. Okay, and obviously, if you allow the governments to start coming in, it will be the same old shit again, right? When governments come in, they will, eventually, they look like as if that they are trying to protect you, but at the end of the day, they're just legalizing this space in their own way. But they are also going to implement their previous legacy teachings, and just like how the existing financial markets. So I'm always a little bit happy and not happy at the same time, but this is just the way it is. Okay, yeah, so that is true. The S&P 500, on the other hand, yeah, has reached an all-time high. I mean, look, there's nothing wrong with an index, and people have been calling for people have been calling for a correction in the stock markets, especially the US stock markets, for a very long time. So the unfortunate thing is that we cannot invest in China directly. Okay, you can't invest in China related stocks directly. No one can. It's usually the institutions only. So usually you look at maybe an equivalent on the Hong Kong Stock Exchange or the US Stock Exchange, right? So what these ideas I'm putting across to you right now are staples, okay, staple ideas. So telecommunications, unfortunately, is not an extremely strong revenue generating thing, because a lot of us are now investing in data, not so much on calls, right? So the revenue has dropped a lot, and everyone's just borrowing data. Okay. Then the other thing is, property is only a very big thing probably in Asia. Okay. And agents love to own property. So if somehow you get some kind of exposure or consider into the real estate market, I think, look, US side property is a big thing too. So there are opportunities in your country that you can start looking at. Now, owning property is one thing, but how about investing in property related stocks or funds? Okay, so consider that. Then we have the commodity sector. Now, commodities is a little bit tricky because although we think, food, okay, maybe we can look at consumer staples. Okay, that would be a bit easier to understand. So consumer staples is very straightforward. You look at the large supermarkets, or anything that is providing you day-to-day essentials. No matter what recession or whatever, right, people still have to get all this kind of stuff, and it's usually at a cost that is kind of affordable, so you don't have to worry too much. Now, on the flip side, there is the untouchable segment of society. So the luxury space is also usually untouched when things are going very badly. Yes, when there's a big financial crisis, usually stocks all come down, and perhaps luxury goods are one of all, is actually luxury related, stocks or whatever, could be the first to take a hit. So LVMH holdings is probably one of those things. You can look at Volkswagen as well. Okay, so all these potential automobile stuff and oil and gas, okay, maybe don't touch oil and gas, don't touch shipping, okay, that's for sure, but logistics is probably something that we can look at as well, right? If there are those local companies that are providing logistics for your country, and so happen if they do decide to IPO. Right now, I don't think there are that many stocks that are in this segment, like, small logistic companies, because right now it's very competitive, and they tend to be just successful in generating revenue, and you kind of see them around, but you don't see them available on the stock exchange, right? So it's hard to get exposure to these things at times. Sometimes the ones that are already too big, they are like growing very, very slowly. They're going to take their time to grow over time. So I'm just kind of dumping all these ideas to you, and I sincerely really want you all to move out of the crypto space eventually, or at least diversify out. Because no point I keep telling you all when to take profit and whatnot. It's not really about that. It's more of generating enough profits and then diversifying and growing your or at least putting your money elsewhere that it can grow at a safer pace. You know what I'm saying? It doesn't always have to be at full-on high risk plays in the cryptocurrency space. So yeah, so that being said, what am I planning to look at? I am looking at China and India equity. Now, China is definitely in the growth phase already. That goes without saying. Yes, we have the US trade wars and trade tariffs that are happening and being implemented. That kind of really took a hit on most China-related stocks. But I think overall they are still intact for the one road, one belt. One road, one belt. I think so that is still in play. Also, for the fact that North Korea is starting to open up already, I think that's a very good thing as well. But however, India would be the next place to start looking for in terms of investments. Now, business people obviously will always have it better, but there's always a high risk element in doing business in general, right? It's always about partnerships, and sometimes when you're in a new market, people tend to want to try to screw you over. But that's not always the case, you know what I'm saying? There are bad experiences, and that is the risk you have to take in business. But overall, I'm just talking about retail investing here. I'm not really asking you all to be an entrepreneur or whatever, but I'm just giving you all some insights to start researching on these markets. Now, the other emerging markets like Vietnam, Myanmar, Cambodia, all these places are also still flourishing. So if somehow you have caught wind of some fund that offers that kind of exposure, I think it would be good to kind of look at it. But I'm not sure how high the fees are, because usually the financial infrastructure is not as accessible, right? And that is one problem as well. So try to see where you all are at in terms of this game, right? And yes, please do consider, because you don't have to like be investing huge sums of money. We're talking about $100 to $500 a month dedicated to this kind of stuff. And at the end of the day, what is your financial objective? Is it just solely that you can retire comfortably? Is it you have plans to kind of buy a nice big ticket home at the end of the day? You need to start thinking about this kind of stuff, guys. Even if you are someone who has a very comfortable paying job at the moment, what is that money doing at the moment, you know, on a monthly basis, right? If it's just sitting in the bank account doing nothing, it's always good to approach your financial advisor or something like that to kind of look at all this stuff from a broad-based perspective. But remember, don't forget the fees, guys, because when you have too high fees and your particular financial asset is not going to be able to generate a decent return, that means you're paying fees on a yearly basis, and you know, it may not be that favorable for you. So kind of have to digest all this kind of stuff. I know it's a loadful, but I just wanted to share my thoughts today. And of course, feel free to comment whether this is something that you're looking at. What do you have in terms of different kind of assets in your portfolio, and what are you open to at the moment? We'll see you in the next stream, guys.